What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, we are breaking down the 10 best returns from IPOs that Robinhood has offered to investors ever since they started doing it quite a few years ago. So if you're excited for today's video, feel free to like the video, subscribe to the channel, and turn on those bell notifications for all future uploads. And also drop down in your comment section below, what company do you think has the highest ROI since being IPO listed on Robinhood? Now, they've had quite a few IPOs since they've been allowing companies to list through them. And again, in case you're not familiar with an IPO, it stands for the initial public offer. Basically, it's when a company goes from private to public, and it's in a way to raise more capital. So they have a set amount of shares, they then put those shares in the market. Investors can buy up the shares, they can sell the shares, and it can hopefully raise capital to grow these companies here. So IPOs are when you're first getting into a company as a public traded company, you're able to then hopefully get in early and then have a nice return. So believe it or not, some of these returns are absolutely insane. Some of these companies I'm not really familiar with, or I didn't know they were even IPO'd on Robinhood, but hopefully we will see and you guys can get your idea for it. We will also be doing a 10 worst returns since IPO on Robinhood in another video, so stay tuned for that. Coming in at the first one with the lowest return out of the top 10 is Instacart, also known as Maple Bear Incorporated. 40,000 Robinhood customers invested in Cart's IPO at $30 per share. That was almost 2 years ago. And since then, it has returned 57% of your investment. So the IPO'd at $30. Right now, they're at $47.17. So right now, you would see that if you invested in Instacart at IPO, at the initial public offer, you would be up around 57% on Instacart. And if you use Instacart, again, it's one of those online ordering. You can order groceries, you can order food, whatever the case is. Kind of like DoorDash and Uber Eats and those ones there. Same idea. Instacart, I think, is more for grocery shopping, though, if I'm not mistaken. But you also order other things as well. So they've done really, really well. Again, up 57% in 2 years. Again, that's very, very good. Definitely outperforming the S&P 500. Coming in at number 9. Number 9 is Arrow Group Holdings, listed actually only about 2 months ago, but now they are already up over 100%. It has doubled its shares since the IPO date, from $10 a share to now $20.20. So if you did invest into Arrow and buy up shares at the initial public offering, you would have already doubled your investment. Now, I have seen some people talk about when they buy up the IPOs, there are certain rules and restrictions where you could be banned for 30 to 60 days if you buy and then sell the first day that the offering happens. You may also put in for 100 shares and get assigned a whopping 2 shares depending on the situation. Why that's the case, I'm not really sure. I'm sure there's some kind of behind the scenes thing that's why you cannot do that. I don't know if it's regulations, I'm not really quite sure, but that is something to keep in mind about that. If you do buy IPOs and sell them the day of they get listed publicly, you might have a chance of being restricted and or banned from buying IPOs for the next 2 to 2 months or so. So Arrow Group Holdings coming in at number 9. I get 102% return. Absolutely insane. Have never really known about this company. I don't know what they really do. I'm sure I can read more onto it as I go. Coming in at number 8, we have the Vita Coco Company, which I believe is the one that does coconut waters and stuff like that. So 67,600 investors got into the IPO at $15 per share, and this was listed a little over 3 years ago. And a little over 3 years, the return is still absolutely amazing. You have made over 130% since the IPO, which again, in about 4 years time or so, you're looking at a very good annualized return of about, 4 years, 130%. You're looking at about, not 70 math. You're looking at probably about a 30-something% return annualized, which is absolutely amazing. IPO price, $15 per share. Current price, almost $35. Absolutely amazing. Coming into the next one, which I believe we're looking at, is number 7, right? 10, 9, 8, 7. God, yeah, it's 7, right? Coming in number 7, again, this one was listed 4 years ago. As of literally a couple of days ago, 4 years of Robinhood itself being listed on Robinhood's own market. and you, believe it or not, you would have made 161%. Again, got in at $38. It was as low as like $8 or $9 a share down here, and people were thinking it was a dead stock to invest in. And now it is trading at over almost $100 a share. So 160% return in about 4 years, looking at about an annualized return of about 40%. So Robinhood Markets coming in at number 7, 301,000 customers invested at $38 per share. Coming in at number 6, we have CoreWeave, which again was a recently listed one, listed as of about 4 months ago or so. 57,000 investors got in at $40 per share, and right now it is up at $104.50. At one point, it peaked a little bit higher up here. It's had a little bit of a pullback recently. Maybe the IPO momentum died off a little bit, obviously, but you'd still be up 161% in 4 months. That is absolutely unbelievable. Will that sustain? Probably, most likely not. There is a little bit of correction happening here, maybe until the next leg up. Who really quite knows? But CoreWeave was one of those bigger ones that was listed, and then again, a nice hype behind it really pumped the stock up. Really good returns in a matter of 4 months. We are now getting into the top 5. So the top 5 best IPOs that have been listed on Robinhood as a percent return. Again, as you watch the video, drop a comment down now as we are taking a quick 30-second break here. Make sure that you drop down in the comment section which one you think is number 1 without fast forwarding ahead. If you can get all top 5, absolutely amazing, of course, as per usual. So we'll see how you guys do with that one at the end of the video. But coming in at number 5, we have ARM Holdings, listed a little under 2 years ago. People were talking about this company here and the relationship to the tech industry and to NVIDIA and everything else of that nature. You would have gotten in at $51, and currently it is trading at $137. So in a matter of almost 2 years, you'd be up 170%. An absolutely phenomenal return for ARM's IPO. I remember when they first started talking about the IPO, the hype was really there. Again, you get this huge run up here from IPO, a little bit of consolidation, a little bit of a pullback here, which is probably Liberation Day down here, and now it's been rallying ever since. So ARM Holdings, again, coming in at number 5 for the percent return. Coming in at number 4 is Duolingo, believe it or not. And as someone who is a Duolingo user that uses it every single day, we only had 12,000 customers who bought in at $102 per share. They're probably looking at this company thinking there's no way it's valued that high. Maybe it's valued a little bit less than that, or it should be valued a lot less. So maybe not a lot of investors wanted to ride this train here. But believe it or not, since Duolingo being listed as of 4 years ago, it has returned 232%. You're looking at an annualized return of over 50% per year, and Duolingo is currently trading at $339. They had a really good earnings report, I believe, recently. They talked about the AI, how they're cutting back on their workforce, focusing on the AI interfaces, and the market obviously liked to hear that, and it pumped the price up. A little bit of a pullback again, as a little bit of a correction here as per usual, but a very solid return for Duolingo. Top 3 coming in at 3rd place is Figma's IPO that was literally listed this week. And it already has the 3rd highest percent return. Obviously, will this sustain? Probably not when the momentum dies off here. I know a lot of people had trouble getting filled here. They wanted, like 100 shares, 300 shares, and they got like 2. So the reasoning for that is not really something that I really know much about as much. I don't really do a lot of IPO investing here, but you would be up 245% in a matter of a week. Again, if you were to sell it this week, though, you would be hit with probably that IPO restriction. So something to keep in mind about. So 245% of a run up in a matter of a week is absolutely insane. It's like meme stock craze, but it's IPO craze instead. And you know what's even crazier before we get to the top 2 here? When I made a video earlier on, there was a lot of companies that were delaying their IPOs because of Liberation Day tariffs and inflation and stuff like that. And now we have Figma, who just gets listed as an IPO, and boom, 245% return. A great valuation that they just got as a result of that, so they can be able to use that money to grow their company as a result. Top two. Now, these top two, you probably would be able to guess these top two, but I wonder what order it'll be in here. So the number 2 IPO access is Circle Internet Group. Circle Internet Group was initially listed at $31 per share, and that was 1 month ago. 1 month ago, listed at $31. It is now worth $167. A 440% return in 1 month. That is absolutely insane. 48,900 users got into this one at their initial public offering here, and they had 440% return if you're still holding shares of Circle, which focused on stablecoin and that kind of stuff with crypto. That's why it was a huge rally behind it. It actually was trading close to $200, if not maybe above $200, and had a little bit of a pullback. Obviously, the momentum kind of dies out for a lot of these IPOs until more and more data comes out, their earnings come out, the analysts, what they predicted to be at, what they value it at. So a little bit of a cooling off period here for Circle Internet Group. And then coming in at number 1, maybe might be a shock to you, maybe it's not. I don't really quite know. But the number 1 IPO listed returns since we looked at Robinhood's, Reddit. Reddit has returned 452% since being listed a little over 1 year ago. 63,950 Robinhood customers invested in their IPO at $34 per share, and they currently are sitting at $188. A 452% return. So those are your top 10 for the best returns of Robinhood's IPOs since they were listed on Robinhood for people to invest in. Make sure you stay tuned and you are watching the future video that will come out about the 10 worst returns for IPOs. Because again, IPOs are not all sunshine and rainbows, as we know. Some of these stocks can do very well. Some of these stocks can be absolutely, just dead and then lose 90% of their value here. So we'll take a look at those next time. So if you made this fun in the video, make sure that you like the video, subscribe to the channel, turn on that bell notification so that you are aware when the 10 worst IPOs video comes out. Hope you're making money in the market, whether it's through IPOs, whether it's through just buying and holding, whether it's through options, investing, crypto, whatever it is you're getting money, get money somehow, some way, shape, or form. And as always, I will see you in the next video.